The NGS All Share Index and market capitalization appreciated by 4.56% to close the week at 7,196.77 index point and also 38.5 trillion naira respectively. The market recorded 4 days of positive closes as against a day of loss. The market closed last week with year-to-date return at 36.97%. Month-to-date, the market has risen by 1.39%. A total turnover of 2.45 billion naira shares worth 40.5 billion naira in 37,959 deals were traded last week by investors on the floor of the exchange, in contrast to a total of 1.4 billion naira shares valued at 25.4 billion naira that exchange ends last week at 28,933 deals. The financial service industry measured by volume led the activity chart with 1.480 billion naira shares valued at 21.1 billion naira traded in 16,671 deals, thus contributing 60.39% and 52.16% to the total equity turnover volume and value respectively. I have with me in the studio Ambrose Omodio, Chief Research Officer, Invest Data Consulting Limited, joining me now live in the studio to do some analysis of what played out at the exchange over the past week. Ambrose, it's a pleasure having you join me on the show this morning. Good morning and welcome to the program.
Thanks for having me again, blessed.
You look amazing this morning.
Thanks.
Let's talk about what played out in the market. We've seen the market hitting the 70,000 threshold and even beyond. What would you say actually is the rationale behind it?
Remember, I said it on this program that the market is heading to 70,000.
Definitely, you did make that prediction.
And also, we are seeing the market dynamics changing already. Now the market at this level, we expect that there will be correction, but the market will still go higher.
Okay.
Why I say so that the Q3 NEC that just finished in October, while we're expecting few of them like ETI and FCMB to release the results within this month, market are reacting to those numbers because those numbers beat expectation, better than expected number, despite the macroeconomic headwinds and all those. We are seeing that the company in Nigeria have done well. That means we say kudos to the corporate managers in Nigeria. They've said that yes, they can tweak their strategies and still, that means it is not done on the policy makers to that they make the economy more stable, and that we can see more employment can be generated or created for Nigeria. That means it's a good way. But one thing that take every investment is against the future. Yes. They've already seen this in positive numbers, and also the fixed income environment is not stable. We're seeing a missed acting for yield. Last time about 2 weeks now, we saw that Treasury bill had about an increase from to 13%. Also, so everything that will happen in the home market. That means the yield environment in Nigeria is looking up, while in the mature economy, where we are seeing central banks of the world going to pause, planning that they want to wind up the high rate for those mature economy. Their yields are coming down. Every equity there is looking up. But here in Nigeria, because of inflation, no matter the kind of impressive yield we are seeing in the market, you match it with inflation. That means the real returns for those in those fixed income market is still negative because we are moving to 13%. We are seeing that almost rates are moving around the 17.5 with future contracts about 21%. 7%. Yeah, 28th and 21st. So the MPC meeting, we want to see where our team are going. If the mature economy, we are seeing that they are going to pause because they are seeing that inflation in this environment has started cooling down. But here, inflation is still hot. That means, are they going to increase rates? If they increase rates, that means they are going contrary to what the president has given us kind of a disposition that they want to grow the economy. You can't grow economy with a high interest rate. That means, what are they in dilemma now? We're waiting to see where they are going. And also, good news for Nigeria that we are seeing that we started kind of cleaning up the backlog of FX. If that is sustained, and also the future contracts we're starting to run it, I believe naturally we'll start seeing dollar exchange rate coming down in Nigeria, which is good, or we need to do more. Let us not the Nigeria economy. The way go the man on the street, take dollar, even the government said, because I tell you, those visuals or those the elites in Nigeria are the one causing problem in Nigeria. But most of them, they are not into production activities, but they are hiding their money in dollar. That means the demand for dollar is high. They keep paying the machine sector that need the dollar for expansion to be also not available. I think this is our, we need to change our thinking. Let's start from the political class and all elites like that. Stop putting your money in dollars and keep it in your room or keep it in your bank. Let's use the dollar to grow Nigeria economy.
All right, it's nice one there. With all the macroeconomic issues that we're seeing playing out in the country within last week, how do you think this will affect the outlook of market trading activities for this week?
For me, like, market already open on a green note today.
Good.
But I expect that because they will call a portfolio shuffling or portfolio balancing, most investors will trade some stocks and buying some other. You expect to see a mixed trend within the market. But one thing is that these institutional investors that already provide what we call hot money in the market, they are not yet in the market.
All right.
Why they are being yet on these numbers? Like retail investors, when they see number, they want to react. But for this institutional investor, they take time to analyze the company, the sector, the industry, to know is there prospect, and also to match with what they are seeing in the yield environment of fixed income market and what the company earnings are, what will be the yield in terms of dividend, all it will be done between now and end of November. Also, I believe that December, because of the seasonality that comes with Santa Claus rally and all those stuff, investors actually position for better return. But they have to invest with knowledge. This is not time to just follow bandwagon. You must have your strategy.
I like that. Have a strategy and definitely treat your strategy to be ahead of all the competitions and the, what I would term, the headwinds that we actually face the market. I'd like to say a big thank you to you as always for your in-depth analysis, Ambrose Omodo, Chief Research Officer, Invest Data Consulting Limited. Thank you for your time. I'll catch you again in the course of the week and we'll talk about how the market is faring this week.
No problem. Thank you.